Is DeepSeek causing a stock market crash? Hey guys, what's going on? How y'all doing? It's a beautiful Monday morning, and today we're talking about the stock market. Let's get right into it. A shocking Chinese AI advancement called DeepSeek is sending U.S. stocks plunging. U.S. stocks dropped sharply Monday morning after a surprise advancement from a Chinese artificial intelligence company. DeepSeek threatened the aura of instability surrounding America's technology industry. DeepSeek, a one-year-old startup, revealed a stunning capability last week. We covered this in my last video. It presented a ChatGPT like AI model called R1, which is familiar capabilities, operating a fraction of the cost. Blah 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 blah. And we all know the company said it had just about 5.6 million computing power. We covered all that kind of stuff. This sent shockwaves through markets, in particular the tech sector. On Monday, the S&P fell by 1.4%. The tech-heavy Nasdaq plunged by 2.3%. The Dow was unchanged. Markets were substantially lower early in this session, but investors may have judged the sell-off somewhat overdone. Meta last week said it would spend upwards of $65 billion this year on AI development. Sam Altman, CEO of OpenAI, said last year that the industry would need trillions of dollars in investment to support the development of in-demand chips needed to power the electricity-hungry data centers that run on the sector's complex models. Oh, what else we got here? U.S. stocks got hammered. On Monday morning, NVIDIA, the leading supplier of AI chips, which stock more than doubled each of the past 2 years, fell 12%. Meta and Alphabet, Google's parent company, were also down sharply. NVIDIA competitors Marvel, Broadcom, Micron, and TSMC all fell sharply too. Oracle, Vertiv, Constellation, NewScale, and other data centers companies tumbled. That dragged down the broader stock market because tech stocks make a significant chunk of the market. Tech constitutes about 45% of the S&P 500, according to Keith Lerner, analyst at Truist. The bottom line is U.S. outperformance has been driven by tech and the lead that U.S. companies have in AI. The DeepSeek model rollout is leading investors to question the lead that U.S. companies have and how much is being spent and whether that spending will lead to profits or overspending. This week kicks off a series of tech companies reporting earnings, so their response to the DeepSeek stunner could lead to tumultuous market movement in the days and weeks to come. In the meantime, investors are taking a closer look at Chinese AI companies. That's from CNN Business. Okay, great. Oh, for fuck's sake. Forget this. Let's just check out Biz. Let's just check out Biz. Okay, I found this is the one post I was able to find without any slurs in it. So it says, please be more specific. This is basically NVIDIA faces 465 billion loss as DeepSeek disrupts AI market, single biggest market loss in history. NVIDIA stock plunges 15% as DeepSeek shakes. Okay, so we got here, and this guy's saying, like, so we can all agree now it's a bubble, right? Please be more specific. Crypto's use case is pretty obvious. Money in platforms, not regulation, which can be used to make gambling, gray area trading, and criminal enterprises. It's not a dream. People really miss the implication. DeepSeek is a bullish signal. O1 gets developed on the $6 million budget. Companies apply the same open source secret sauce to $600 million budget with some tweaks. Profit with highly intelligent models in before. We can't just trade models infinitely. What is grokking? Literally nobody can answer what AI is good for. Like, there are so many applications for AI agents that the problem will be what we will do with the unemployed people. Administrative work will be taken over by AI agents. I have a transport company, and the amount of bureaucracy you have to fill out to bill clients to comply with transport regulations makes you want to jump out a window. It's a simple PC with an NVIDIA card could manage all of that. I would instantly fire 3 of my office ladies and save $150K a year, probably more, because I would also avoid fines and would free up more time for other employees. The economy is full of bullish jobs that need to get sacked as fast as possible. Please be more specific. For free. Bro, do you know how resource intensive AI is? Okay, we got that. Then we got some on the Fediverse here. By the way, the stock impact should only be for NVIDIA and no one else. DeepSeek basically shows you can get great performance without using boatloads of 40K GPUs, hence NVIDIA down. The rest of Mag 7, the Magnificent 7, the big stock market, the big stocks, basically what I'm trying to say, the big companies and the publicly traded stocks, the Magnificent 7. No, I can't name them off the top of my head. It's actually upside initially that they could get away with paring back capex. This is what you get for feeding gamers fake frames. Or they just upscale their stock price. Like 500 billion wiped out today just from NVIDIA and AVGO alone. LOL. And this is from Bloomberg Television. Little quick update. Let's check this out. Just as we're going here, I'm kind of learning about this. I am not an expert on stock or AI or anything like that. I'm learning this along with you guys. There's other channels. I'm going to have another channel, another video I want to check out after this one where the guy explains a little more in depth. But let's check out this Bloomberg piece on what's going on with DeepSeek may end U.S. stocks exceptionalism. 3-minute MLIV.
What are you taking away? Nasdaq futures down 2.6% at time of as I'm looking at them right now. What are you taking away from a market's perspective about this wake-up call?
I think it's really massive, and I think it's massive for two main points. It's not just about the challenge to U.S. hegemony in the space. It's not about the disruption potential there. That's a kind of a side story. And I think Robert Lee's analyzed it perfectly there and summarized kind of the sector challenges there absolutely perfectly. And that doesn't change the fact that NVIDIA still got monopoly in the space, and many of the big names do as well. The reason this is such a game changer is that it's about cost. It undermines the immense amount of money that's been spent on hardware by the US mega cap tech stocks. Sure, they want a dominant position, but it now looks tenuous that they're going to get a return on that investment. That was always difficult. But now, and this is the second aspect, now that this is open source, it really makes it very unlikely that they're going to be able to justify the return on investment, given that there's a much more cheaper alternative out there for the world to use. So ultimately, this is good for global growth. It is good for global productivity. It is positive for global stocks, but it deeply undermines the massive premium that we pay for U.S. mega cap stocks. That exorbitant privilege.
I heard that Sam Altman, this is just an aside, but I heard that Sam Altman was asking for like $7 trillion to keep funding OpenAI and his little AI projects and whatnot. So that's going to be hard to justify now. I mean, plus the big costs of AI related to that kind of stuff, at least from what I understand. You'll have to forgive me, I'm kind of a pleb when it comes to this kind of shit, but I just find this really interesting. I thought you guys would appreciate some updates on it, but it's not looking good for American AI companies and NVIDIA, at least at this moment.
That we've got, and therefore I think this is.
I hope Nancy Pelosi's doing okay. That's all I have to say about that.
The catalyst that people are looking for, combined with it is a perfect timing of Trump really kind of putting an extra cost on U.S. trade. I think it is the catalyst to end, 15 years of U.S. stock market exceptionalism.
That's quite a big call. Let's talk about the ripple effect that comes off that. Talk to me about the most correlated assets to that story. It's interesting, Bitcoin is down this morning. That obviously is being maybe a reflection of what we're seeing in NASDAQ futures. How far do the ripples spread and how quickly do they go?
So I think, first of all, this is about a relative performance idea. It's about undermining U.S. exceptionalism. So it's saying that, U.S. stocks will fall further in bad times and rise less kind of in the good times going forward. But you're right, in the short term, while we're focused on U.S. tech negativity, which may last for the week, then crypto is really suffering. Now, crypto seems to be suffering from a few aspects. One is, I think there's disappointment that, the Bitcoin reserve has...
Check in on the crypto bros, the guys who post those pink Wojaks with like the crying blood, make sure those guys are doing all right. Give them a call, see how they're doing. Maybe bring them some Hot Pockets and Mountain Dew. Those guys must be going through it right now.
Hasn't been announced, and people are wondering whether it will even be a Bitcoin reserve or some other crypto reserve. And then you've got the CEO of Coinbase coming over the weekend saying, look, there's 1 million new cryptocurrencies being created every week, and I think this kind of undermines the sector. I saw a piece out there, I've not checked it, verified it, but there's apparently 36 million tokens out there, which shows kind of the competition in the space for kind of these arbitrary lines in a data spreadsheet. So I think that overall, crypto is going through a tough period. It is not helped by the losses in US tech. There is definitely an overlapping investment sector. There's an overlapping kind of idea that US has leadership under Trump in both crypto and tech, and those ideas are being undermined. So I expect that US tech outperformance is now over, and I expect crypto's at least got a briefly tough period ahead.
Alrighty. Cool. But let's check out, this is Trader Nick. He knows a bit about this kind of stuff. Not super familiar with his channel, but he was talking about this and kind of going over some of the stock markets not doing too hot.
Look at the S&P 500 down 1.76%. The NASDAQ, which is down just shy of 3%, but at one point was down 5 on the day. The Dow Jones slightly flat today, which should tell you something about relative performance here. And then the Russell down 0.7%. Asian stocks also got hit hard, specifically the Japanese stock market down 3.5% as the Bank of Japan rate hiked, and you have Chinese stocks actually up on the day. So some divergence across the board here. And then you have the VIX, which spiked at one point here on the day, up 50%, has given back a lot of that so far, up about 26-25% on the day so far at the time of recording this. I just want to warn also that volatility is very high right now. So by the time you get this video, the market may look a little bit different, but many of the commentary points that I'm going to make in today's video should still remain the same. Gold is down about 1.1%. Silver is down 1%, copper down 1.3%, natural gas down a little bit, and oil, which I took a long position perhaps a little too early, is also down about 1.9% today. Bitcoin giving back some gains, but bouncing off of the lows pretty well. I'm still in this trade, up from when I initially bought it back over here, the 13th of January. Got my stop loss below today's lows in case we continue to move south. The dollar index also is failing to hold support here, which is a key thing I want to point out. Dollar index looks short term, in my opinion, a little bit weak on the technical front, but our U.S. economic heat map would still suggest, at least in the video, that a lot of factors are still pointing towards dollar strength. Even if in the short run we get some bearishness, I'm looking to potentially buy that dip and build a bigger long position on some U.S. dollar crosses that I'm watching. GDP growth, manufacturing PMIs, services PMIs, these are also showing some very strong growth out of the United States compared to forecasted values. So that's going to keep me more on the bullish side of the dollar. When we look and filter for major currency pairs, you can see a lot of that same economic data that we just looked at on the heat map is contributing to some bullish US dollar cross bias. Bullish on things.
Okay, so I really wouldn't worry about the US dollar too much in this scenario, but I do have one final thing from Yahoo here I'd like to check out, and there we go. Let's move me back. Oop, wrong way. Okay, there we go. Let's move me back over here. There, I'm more comfortable over here. Anyways, DeepSeek sell-off reminds investors of the biggest earnings story holding up the stock market. Let's get into this article. Monday's swift sell-off in the market serves as a reminder for not only what's been driving the force of the bull market thus far, but also what investors have been expecting to come in 2025. It's all about big tech earnings. New developments from Chinese artificial intelligence company DeepSeek sparked the rout as investor concerns over brewing competition in the AI space for NVIDIA. Other big tech names prompted a pause in U.S. AI trade. NVIDIA stock dropped more than 16%. Meanwhile, fellow Magnificent Seven members, Microsoft, Alphabet, and Tesla were at 2%. We're all off 2% or more in midday trading. Broadcom, another large player in the AI space, is down more than 60%. Expectations are high. One skeptical headline can knock the market off its axis. Red Holt's wealth management chief investment strategist Callie Cox wrote on a note on Monday. That's exactly what we're seeing today. As you see here, NASDAQ composite, and it's down quite a bit. So on Big Tech's rapid earnings growth has been a risk to the market. The strategists have been talking about for more than a year. The index valuation near multi-decade highs, and the 10 largest stock comprising nearly 40% of S&P 500 strategies have argued the rapid rally in stocks is increasingly on thin ice. There's been so much concentration in the one area of the market. This has been the dominant AI-themed market, and all of a sudden you bring in some uncertainty to that market. The initial reaction is to sell first and ask questions later. Truist co-chief investment officer Keith Lerner told Yahoo Finance. Let's check this video out for a little bit.
Well, you say how? They probably didn't have a great answer, right? Well, here is an actual tangible answer that investors can feel, touch, see, use. They can go online and use this technology, and it's a reason for why earnings might disappoint. I think a lot of the other risks we've talked about in this market, whether it be the Fed or whether it be Trump, you can sort of lay out very clear reasons why that could be bad for stocks or bad for the economy and then bad for stocks. For Mag 7 and big tech, we haven't had a lot of reasons, and it feels like over the weekend we finally got our first tangible reason.
Yeah, we certainly did get a tangible reason. I think the big question is how much tougher this is going to make this earnings week here, or earnings couple of weeks here, as we do wait for more of the Mag 7 companies next weekend, and then, of course, NVIDIA in a few weeks. Josh, how are investors or strategists, I guess, stacking this up against the Fed and the threat of more tariffs and ultimately the impact that is going to have? Yes, obviously earnings very much, you can make the argument, makes a lot of sense, the biggest driver, most important right now to that overall market narrative. But the Fed and tariffs certainly do play a part into that macro view.
They do, and they maybe play more of a part in the tomorrow view, right? And I think that's why you saw the market trading on what President Trump has been saying so much last week, because that's a soon story, right? If we're talking about DeepSeek really growing here and becoming an AI competitor and taking market share from NVIDIA, I don't think it's happening tomorrow. I think that's happening down the line, right? And we need to learn a little bit more there. But tariffs, we're supposed to get some solid news on tariffs this week. And then we'll have something to sort of price in that maybe we hadn't priced in, right? The Fed, we're going to have more tangible evidence of where they're headed.
People are saying there's some conspiracies on that, from some people I've been talking to, but they're saying that DeepSeek was under some kind of cyber attack, or that some kind of, let's see if I can find it. There was something I saw from Twitter. But this stuff right, oh yeah, this stuff right here, hold on. Goldman is calling a NASDAQ sell-off a low-quality dip and encouraging clients to buy it. And Drew Pavlo says America should sabotage the Chinese AI program, sabotage DeepSeek, too dangerous to let a totalitarian dictatorship have this technology. So that's kind of interesting there. And another, let's see here if I can find it. Okay, and it says right here, DeepSeek is subject to a large-scale malicious attack, and Universal Soldier here says, obviously the CIA. Let's see, DeepSeek attack. What's going on here? Here it is. Here we go. DeepSeek hit with large-scale cyber attacks as it's limiting registrations. DeepSeek on Monday said it was temporarily limit user registrations due to large-scale malicious attack on its services. Chinese AI startup recently toppled OpenAI's ChatGPT from its title of most downloaded free app on Google's App Store. DeepSeek on Monday said it would temporarily limit user registration due to a large-scale malicious attack on services, although existing users will be able to log in as usual. The Chinese artificial intelligence startup has generated a ton of buzz in recent weeks as a fast-growing rival to OpenAI's ChatGPT, Google's Gemini, and other leading AI tools. Early on Monday, DeepSeek took over rival OpenAI's coveted spot as the most downloaded free app in the U.S. on Apple App Store, dethroning ChatGPT for DeepSeek's own AI assistant, helped inspire a significant sell-off in global tech stocks. Buzz about the company, which was founded in 2023, and this is R1 model last week, expected tech analysts, investors, and developers say the hype and ensuing fear of falling behind the ever-changing AI hype cycle may be warranted. Let's see. I can't see. That's pretty much it. It's pretty much stuff we already know, but I'm going to leave it there. Thank you all for watching. So DeepSeek's under attack. AI is going to take over the job market. U.S. stocks are plunging. It's a big fucking mess. A lot of chaos. A whole lot of nonsense going on. Could I sit here and tell you, hey, nothing ever happens? Well, maybe. I don't know. We'll see how this plays out. It's only Monday. It's a start to a new week. We'll see what the stock markets do, what Trump's tariffs do. I don't know how those are going to play into it, but I'll keep you guys updated as these stories develop. And I might not have the best analysis, but hey, I'm pretty much just doing this for fun. So thank you. Like, comment, and subscribe down below. Let me know your thoughts in the comment section. Thank you all for watching again, and I will talk to you guys later.
Ryan Litzel.